This is such a predicament of serious research. I want to call your attention to the latest issue of the briefing report. This report addresses market behavior, summarizes the results across the equity landscape, and it's published each month, and typically it's looking back in the prior month. Importantly, at the end of the year, we publish one that looks at the full year results. This year's title, 2022 Triple Threat Year. At the heart of this was really the dramatic events that unfolded in 2022. The ongoing fallout with the pandemic and its linkage really to the inflation fears, the beginning of a Fed tightening policy, and clearly the shock of the Ukraine invasion. Bring these things together and you had a tumultuous year. This chart here really underscores how challenging it was to outperform. What we saw was a massive break or an ongoing break among innovation speculative shares. In addition to that, we also saw commodity prices lift, especially in the energy sector. As a result, this chart basically tells you that the only thing that traded up was effectively energy. There may have been a few exceptions here or there like utilities, but growth stocks broke down sharply, the NASDAQ broke sharply, and somewhere in the middle was everything else. This panel here represents some of the themes that are surfacing to some degree in our research. We think it is worth focusing on for 23. Very simple, from the left to the right, you're looking at the growth and value breakdown. Ironically, in a period where the profit cycle is threatened and has begun to slow, growth strategies broke down. A lot of this, let's say the value outperformance, really has to do with the speculation break that occurred in the growth stocks, so the most extreme firms that broke down. In addition to that, the commodity run-up also fueled undervalued securities. So as much as you would expect growth to have outperformed in a slowdown year, the reality is that you had some very unusual events occur. To the right of that, you're witnessing samples of speculation. In this case, we kept it fairly simple. The extended FANG names and one of the funds that are very popular, the ARK Innovation product. These are down sharply, over 60% on the ARK product, and that's for 2022. Bear in mind, some of this damage also occurred again in 2021. So these numbers are very horrific. To the right, though, we start to share here is really where's the market going, what's the rotation like, and besides the energy sector, one of the things we started to see was a clear interest in infrastructure, energy-related plays. And so what you'll see is that clean energy materials were actually up for the year, and infrastructure broadly outperformed, still on the downside, but broadly outperformed. In addition to that, the income strategies were, especially dividend yield strategies, fared well. So at the heart of this, though, we keep underscoring that you're still in this sort of Fed tightening cycle that concerns on inflation and the profit cycle slowdown. So this rotation that's underway is likely to be long-lasting. The idea that speculative names may not just rebound quickly in 23, and this rotation into sort of like the grittier parts of the equity market, IMEs as we call them, industrials, material, energy, I think they're here to stay. So take a look at the report. And then finally, one other really neat element here is that a silver lining in this challenging period is that active management is back. Our quantitative blends are active products. They broadly outperformed, and this is not really tooting our own horn. What I'm trying to share with you is that to some degree, as markets go back to fundamentals, active strategies start to work. Active managers do better, quantitative models do better, short books do better. And so we are in a very different place, potentially constructive if you're in the active management business. Take a look, and as always, we'd love your feedback. Thank you.